Hey everyone, welcome back to Corporate Decoder. Today we are diving into a report from Fluent Inc. and it looks like some insiders are betting big on their own company. Let's see if it's a smart move or just wishful thinking. This report is a Form 8K, which companies file to announce major events. The key date here is March 19, 2025. Think of it as a snapshot of what happened on or around that day. The big news is that Fluent Inc. entered into agreements to sell something called pre-funded warrants to certain big shots within the company and some of their major stockholders. Basically, they are raising money by selling the right to buy stock later. These aren't your everyday warrants either. They are unregistered, which means they weren't offered to the general public. Instead, they went straight to these insiders and major stockholders. These special warrants allow the buyers to per share, think of it like getting a huge discount. To make this deal even sweeter, they tweaked some existing agreements with these insiders called support agreements. To include these warrants, it's all about making sure everyone is on board and aligned with the plan. Here's a catch for the insiders. Before they can actually use these warrants, the company's other stockholders need to give their approval. The company is obligated to get this approval at the next annual meeting. If they can't get the thumbs up by then, they have to keep trying at more meetings until they do. The company is providing the details of the agreement for informational purposes to investors. It is important to understand that the details in the agreement are to allocate risk between the parties involved and not necessarily facts of the business. The information within may change over time. The deal officially closed on March 20, 2025. That's when the warrants changed hands. Fluent Inc. pocketed roughly $5 million from this deal after paying some expenses. They plan to use this money for general expenses, which might include things like new equipment, covering day-to-day costs, and paying the bills. To reiterate, the sale of these unregistered warrants was done under a special rule that allows companies to avoid the usual registration process when selling to a limited group of people. Now let's zoom out and see what this all means. Basically, Fluent is getting a cash injection from people who already have a vested interest in the company's success. The insiders are putting their money where their mouth is, betting that the stock price will go up. Is this a good sign? It could be. It suggests that those closest to the company believe in its future. However, it also raises questions. Why did Fluent need to raise money this way? Were there other options? And what happens if the stockholders don't approve the warrant exercise? We don't have a full financial picture from this report, but considering that they are looking for $5 million to use for general corporate purposes, we can assume that they need some more cash. Also, the insiders are getting a very sweet deal here that smaller investors aren't able to get, so it could be a good deal for the few who got the warrants and not that good for the rest of the shareholders. Ultimately, the success of this move depends on Fluent's ability to use this money wisely and grow the company. Only time will tell if this insider bet pays off. Thanks for watching. If you found this breakdown helpful, please hit that like button, leave a comment, and subscribe for more corporate deep dives.